Jared Blikre is standing by for us down at the New York Stock Exchange. Jared.
Yeah, it looks like we're under a little bit of pressure here to start the day. S&P 500 down about 2/3%. Yesterday's price action looking slightly constructive here. Now, I was pretty negative given the reaction to Powell's comments last week, so that big slide into the close Friday. However, we do have another test of support here. Until these lows are taken out, I would say direction probably could go to the upside here, but you have to exercise a little bit of caution. NASDAQ 100 and the NASDAQ Composite both under a little bit more pressure here, but they're also testing their lows. So interesting chart formations just to keep an eye on. And looking at the sector action, guess what? Energy is back today. It was down about 3% yesterday. The worst performer, it is the best today, with WTI crude oil hovering above $100 per barrel. Also seeing materials, real estate, and staples in the green. To the downside, communication services, which houses Alphabet, Facebook, Meta, also Twitter. That is down 1.5%. Tech also taking it on the chin. And consumer discretionary rounding out the bottom three. You'll notice those are all the mega cap sectors. So you take a look at the NASDAQ 100, and that is a pretty red picture there, though not a lot of dark red. I'm seeing ASML, that's a standout. Baidu down about 3%. That is a standout. So let's take a look at the Chinese stocks and see that they are under pressure once again here. Already mentioned Baidu. Z-Labs down 3%. I'm not going to show you the year to date. I do that too often, and it kind of makes me sad. So let's move on to the travel sector, seeing a little bit of red here. I'm serious, Julie. I go through this every day. I look at ARC and I think, geez, this is not good stuff here. Travel down 1%. We covered the Carnival news. Thank you for that, Julie. Royal Caribbean down 1.5%. ARC Innovation. Now look at this. Shopify down 3%. Zoom also there. Roku down 5%. And let's get a check of the EV space. Tesla, front and center. Elon Musk down 1.5%. Rivian is a standout. That's down about 4%. And let's take a year-to-date and a one-year chart of Rivian. That's down 67%. Much more if you were to count that high right there. Also taking a look at GM here. GM down 1.5%, down 32% over the last year. And then you compare that with Tesla, down 1.5%, but really maintaining a lot more gains than these other ones have. You can see it's right in the middle, basically, of a very, very large trading range, guys.
A lot of sad charts, though. I mean, with the exception of that last one, definitely some sadness-inducing charts. Let's talk about another one, potentially. We are seeing yields really back off quite a bit over the past couple of days, but it comes off on the back of a monster rout in bond prices and the increase we've seen in yields this year.
Yes, very true, Julia. And I'm going to show you a chart of the ICE B of A Move Index, and we take a look at this from time to time. This is basically the VIX of the bond market. This is a very troubling pattern because there is a consolidation going on over the last 6 weeks, I would say. Now, you can see the trend is up here. When you have a consolidation, there's usually a resolution, a breakout in the direction of the existing trend. That points to more bond volatility, and I'm not sure the market can digest this. And Jim Bianco had a great series of tweets. This is a 10-year T-note yield, by the way. You can see off about, I don't know, what is that, 15, 20 basis points from the high. It seems like these moves get greater and greater every day. He's pointing out, this is Jim Bianco, updating the bond market's 2022 carnage, the total return of the Bloomberg Global Aggregate Index. This is $68 trillion worth of bond assets. More than 28,000 bonds has lost more than 10% year to date. Nothing remotely like this has ever happened before. Here is the current year, and here is the cone of what has happened over the last few decades. You can see a huge divergence there, and it's spilling over to equities as well. So here's another one. 2021 was the worst year ever read for the 2-year. This is far worse. Who buys a 2-year note? Someone with a lot of leverage, carry trade, like a hedge fund or a bank. All three of these charts, I only showed you two. The system is not designed for these kinds of losses. How much more can it take? So here's that 2-year, and you can see almost never does it even lose any money. And these hedge funds, which are levered up, are losing their shirts on it. So you take a look at the big picture here. We have a lot of carnage in the bond market. It's been spilling over to equities. And unfortunately, the charts suggest that there's more of this to come. On the time frame, we don't know, but we got to keep our ears to the ground.
Jarrett, I never want to make you sad, so I made a note to never ask you for year-to-date charts of the Archiverse.
Thank you.
All right, do what I can.
Got it.
Jared
That's all I
Blikre,
ask.
thanks so much.